Cathay Pacific next. It's controlled by the Swire Group, which is a UK-based family-owned trading enterprise, as well as by the Chinese government, because Air China has a 30% stake or thereabouts in it. It's based at the Hong Kong International Airport, and it's the largest operator out of Hong Kong, and it's also a very big player in air freight, cargo in the Asia Pacific region. Market capitalization, though, remember it's principally listed in Hong Kong, but if you can convert Hong Kong dollars into US dollars, you get to about 5.21 billion US. Price to earnings ratio of 9.35, dividend yield 0.96. Under the whip a little bit, though. A lot of competition in that Chinese market.
Yeah, and the share price is showing it. I mean, I think the stock has halved in the last 18 months. Huge competition, as you alluded to. And also some problems with their finances. You know, we were chatting about hedging losses, so they're not fully benefiting from these lower oil prices.
Yooks, there's the price that you mentioned. So as you say, literally within the last 18 months, it's gone from 14 to 6.7, which is unfortunate. Actually, what we're looking at here is the OTC, not OTC, but ADR, American Depository Receipt, listed in New York. But that would track the Hong Kong dollar price. And remember, the dollar, Hong Kong and US are pegged, so that doesn't. That's a nice sort of reflective share price. Okay, what else to say? When you say competitive, back about 15 years ago, this Chinese government split their industry into these regional operators, all of which have like access to funds from the Chinese banks and all brutally competitive. You know, in China they don't mess around. If they're having a bit of trouble with business profitability and turnover, they just cut prices.
Exactly.
Bail it out about profits later.
Well, that's the problem, and that's their closest competitor. So it's definitely eating into margins and potential clients in that regard. Profits unfortunately are plummeting.
I see from my notes that they also own Dragonair, which is a sort of discount carrier. And that's quite a common strategy if you're battling to compete against the discounters. Open your own discount operation.
Correct. To try bump
But
up
it's
the
a massive
volumes.
potential market. You see these numbers where they say they reckon the air traffic in China is going to increase fourfold in the next 2 decades. And that's because lots of Chinese people, there are 1.3 billion of them, and most of them have never flown in an airplane ever before.
I think that's right, but when you've got the big brother over the border just throwing unlimited cash at your competitors, as we potentially have here, it is a problem.
So not hot.
Not for me.
Okay, sorry, Cathay Pacific.